Next, we will hear from Justin Kringstad. In August of 2008, Justin was appointed by the North Dakota Industrial Commission as Director of the North Dakota Pipeline Authority. Justin received his geological engineering degree from the University of North Dakota and has previously served on the Harold Hamm School of Geology and Geological Engineering Advisory Committee. Justin, wife Katie, and 3 daughters reside in Bismarck, North Dakota. Help me welcome Justin as he updates us on the future of gas transmission and WBI Energy's Bakken East Pipeline.
Thank you. Excellent. Well, thank you, Ron. Thank you to the NDPC team for allowing me to be back again this year. Looking out, walking around the room, obviously a lot of familiar faces. There are some new faces here. For those of you that have seen me present before, you know what you're in for. To all the new faces, I have to warn you, I only know one presentation speed, and that's blistering. And so we're going to be ripping through a lot of content. If you blink, you're going to miss a slide or two. If you yawn, you're going to miss a few. So with that, let's get rolling. So we're going to start off, obviously, with the vital signs of the industry here in North Dakota. What's the industry been doing? And then we're going to transition into the natural gas scene and what's been developing. I'm very happy and pleased to see over the last couple of weeks, we've seen the rig count in North Dakota tick up a little bit. I started getting uncomfortable when I saw the rig count starting with a 2. We've seen that creep back up closer to the mid-30s, which is exciting. That is a very good number for where we're at today. The one thing why that rig count is so important that we keep those bits turning, we're out of DUCs. That inventory has been depleted over the last several years, so that rig count, that rigs putting new holes in the ground, more important now than it really ever has been in recent years. We've got a few wells in the inventory. Obviously, it takes a bit from spud to actual production to surface, but by and large, keeping an eye on that rig count, very, very important. The metric that we're seeing in North Dakota as far as WTI pricing relative to the rig count in North Dakota has stayed consistent now over the last several years. You can see that on the right-hand side. It's about a 0.5 metric. So if you take the oil price WTI, take it times 0.5, you're really going to get close to the ballpark that North Dakota has really settled into over the last several years. Typically, every big industry upset, big price movements will reset that to some new normal. But that is where the industry has settled in. That being said, the rigs that we do have operating, certainly operating much more efficiently. That green line is what you want to focus in on this graphic, and that is spuds per rig per month. That has continued to grow. That is great. I would not be surprised as we see longer laterals coming, the 3, the 4 mile, that we start to see that plateau a little bit. That would be a natural progression. It has not to date shown any major signs of plateauing, but that will likely be seen here as we see more and more longer laterals. The DMR team, Nathan, I'm so excited they put this graphic together for the industry. What you're looking at, that is market share in blue of your traditional 2-mile laterals. In orange is your 3-mile laterals, and then at the bottom in green is 4-mile laterals. And so really starting to see that shift from 2 to 3 mile drilling taking place in North Dakota, roughly a third of the wells being drilled today, long laterals. Every indication that I'm seeing and hearing is that we will continue to see the market share grow on those 3, and we will start to see that 4 mile market share pop up here in the not too distant future. All that to say, rigs is one thing, very important to watch. The other, when we talk about production, we'll start with the oil side that's driving the economics, is completions. And what does it take in order to maintain, grow, or at what point do we start seeing warning signs of production sliding within the basin? The magic number that we're looking at on this slide is 80 completions per month. Just the math is suggesting right in that ballpark. And these are traditional 1280 metric. That's what it's going to take to maintain oil production at a flattish type level here over the next several years. So the question is the activity levels in North Dakota at a sufficient pace and level to maintain that? Will we see growth? Should we plan for contraction? The first thing that I'll look at on that front is in blue on the left-hand slide here, which is frac crews. So drilling rigs are one thing, frac crews are what's making those completions and getting that production flowing to the surface. And on the right-hand side of this graphic, that's the frac efficiency. So if you have a frac crew count, how many wells can each of those frac crews do in a given month? You can see year by year the efficiency gains. I think the only reason 2025 looks a little bit more pessimistic is the data we have is largely winter months and limited as far as completion numbers go. I would expect as more data comes in throughout 2025, we see that start to ratchet up here. So 12, 13, 14 frac crews isn't enough. On the right-hand side, when we run the numbers, we assume roughly a third of the wells being drilled are longer laterals. The magic number I watch for every month in Nathan's report is going to be 13 or higher. I would love to see that frac crew count stay at least at 13. Any higher than that, I think there's potential for some near-term growth. If we start seeing it slide below that 13, then I start to worry if that's sustained, that we could see some contraction in production levels. So that's on the oil side. I was brought up here today to talk about natural gas, and it starts with the GORs. This is something that we've been talking about for years now. The GOR data, as of the latest I was able to pull together, the trend is continuing. 2025 here, again, limited data, confidential status. We only have production through June, so it's limited. I would expect I have no reason to believe that 2025 is not going to follow on suit with 2024, 2023 data that you can see in those increasing rates of natural gas coming from these wells as producers are bringing fluids to surface faster, that pressure drawdown, bringing that natural gas out of solution at a quicker pace. So where does this go? The big debate in the middle part of this slide is how far does this gas-oil ratio grow in North Dakota? This is a debate constantly between the midstream companies, producers, myself, other forecasters, the downstream side looking at available supply. You'll see my forecast in the middle, suggesting that it gets up to somewhere around 4.5 to 5 thousand cubic feet per barrel of oil in the outward years. We've seen some history in the past that suggests 4 in the fringe areas as we continue to develop the McKenzie counties, the core area of the basin, much hotter, much higher GORs in those areas, which would suggest higher GORs over the long term. Another metric I look at is we see month-to-month fluctuations. So anybody that watches my material, they'll know that every month we watch GORs. Did GOR go up? Did it go down? Those monthly fluctuations are largely just a factor of near-term kind of flush production. If we remove flush production, we pull out 2 to 3 years of just new wells coming online, and we look at the base gas-oil ratio in North Dakota, it tells a much different story, and that is the bottom portion of this graphic, which is extreme consistency. We don't see those real strong month-to-month fluctuations. We're now up to 4.8. So to think long-term that North Dakota could get to 4.8, the base production's already there. I have some fears that maybe we're still underestimating gas-oil ratios in the Bakken. That has been something that's challenged us for many years. Maybe 5 years from now we say, boy, we were really conservative on our GORs, so we'll keep an eye on that. We'll blast through some of these production slides. Again, every indication from the well performance, very consistent, very strong, nothing to worry about. One item that is certainly worth noting is different activity and different strategies by our producers. Record low gas flaring. This is something that cannot underemphasize the value of this in capturing every possible molecule, getting that into the gas marketing stream and getting that downstream. So what does all this mean, right? You heard me talking earlier about 80 well completions, the frac crews, the drilling rig counts, everything is suggesting somewhere in that ballpark of 80 well completions is a reasonable number to think about. Well, as we know now with the GORs, 80 well completions on natural gas performs much differently than 80 well completions on crude oil. And so as you can see, 80 well completions, if that's the pace, that's without question back on the growth side of the equation. And so making sure then that the midstream pieces are in place in order to address growing volumes of natural gas. Again, based upon GORs increasing, relatively flattish oil outlook in my base case, and strong natural gas growth. So moving further down the supply chain, quickly touching on the gathering and processing piece of the industry. Very good news. In the early days of the Bakken, there were certainly challenges on midstream being able to keep up with producers as they were working across all corners of the basin. It was challenging to get new wells connected to gas gathering as quickly as operators could get them drilled. Very happy to see now month over month consistency that new wells capturing gas and new wells producing gas are hand in hand. If we ever see that metric start to slide, then we'll certainly start to raise some alarm flags. But at this point, very, very good news from the midstream. They're keeping pace. Everything is looking good. On the gas processing front, again, a very good near-term situation as a result of heavy investment in the 2018-2019 timeframe by the midstream sector in North Dakota, put North Dakota in the position it's in today where we can see 3% and 4% flaring almost at levels we didn't think were possible 10 plus years ago. The challenge you'll see on this graphic is that long-term, I believe if things follow that base case scenario in black, that we will need additional gas processing. There was one announcement you can see in green, that was the Hess project that they've announced. I know other midstream companies are looking at what their fleet of gas plants looks like, what would expansions look like, so the eyes are watching this closely. So I would expect in the outward years, we're going to continue to see investment on the processing side. Another key piece, I wish I had a way to calculate it. I've got some data that I've been grinding through. But gas processing in North Dakota is not always in the ideal location. And so we find areas where plants get full, other plants have slack capacity, and the data is suggesting more and more third-party agreements between these gas processors, adding to the efficiency of our gas capture system in North Dakota, which is driving that gas flaring volume and percentage even lower. So my hat's off to the midstream companies where you're working together, move gas from one party to a third party to make sure that those operators and those wells can keep that gas flowing, keep it in the pipe. Long term, the only thing on this graphic is that bottom piece. How much new gas processing do we need in the basin? If I were just to throw a number out here today, it's north of a BCF a day of new processing capacity. I would suggest that should be in the planning phase or at least at the table in discussion at this point. Long term, we certainly will need that, and we will need additional cooperation and coordination between the plants and the midstreams to make sure that we can get that gas capture number even higher. The long-term assumption here is planning at least for roughly 2% in this model that you're seeing here flaring. So transitioning now to the transmission side. This is what the whole panel was talking about prior to me. No doubt you've heard at this event discussions of moving natural gas from western North Dakota to new markets around the region. So this is what our natural gas infrastructure looks like today on the residue side, the dry gas piece of the sector. You can see the 30-plus gas processing plants with the black icons in the western third of the state, and then all of our major pipelines, and then down near the Baker, Montana area, that is North America's single largest natural gas storage field operated by WBI Energy, also interconnected with our play up here. If I take that same graphic now and shift it to capacity, this maybe helps you get a better sense of where the important lines are, where those export systems exist. Very reliant on that yellow-orange system there, Northern Border Pipeline. That is our major egress system out of the basin. We've relied heavily on that now for the last 15 years as the Bakken has grown. That system, again, has been vital to our success. The challenge with that system is that we are quickly, over the last number of years, filling that system up, and we will need incremental solutions. In red, what you're looking at, that is North Dakota's market share on the Northern Border Pipeline. So north of 80%, typically over the last handful of months, around 80 to 85% market share on that system. The one thing that has kept North Dakota, at least through this summertime period, in a very good position is what I'm calling our summertime tailwinds, where things did not come to a head as far as extreme gas constraints within the basin. A few things have been working in our favor. These are things that should be on the list of over the next 6 months that could shift, and we'll keep an eye closely on that. But summer injection season, there's 100,000 decatherms per day. You can think of that as 100 million cubic feet per day of gas that's not hitting the pipeline systems because it's going into storage down at that Baker area. So that's one of the tailwinds that we've had here at our back this summer. Basin Electric, new power gen coming on, that's kept some of those molecules as well out of that interstate, out of Northern Border, keeping space available for Bakken production to keep flowing, as well as decisions by our gas processing fleet for high ethane recovery. And so we have seen Northern Border's BTU level, no doubt for those of you that have followed me for a while, we've always talked about ethane content, heat content in the Northern Border Pipeline. The market is such that ethane is being captured at record levels here in North Dakota. That is allowing more space on the Northern Border Pipeline. Where that's going, that ethane is being captured at the plants, being sent down NGL pipelines to the mid-continent market at record levels, again, and that 120 to 140,000 barrels per day of ethane being pulled out of our gas stream and sent downstream. Why that's important is on the bottom portion of this. We convert that to space on Northern Border, space on the WBI pipeline system serving the Bakken, and that is what I'm essentially calling bonus space that's been created as a result of decisions at the midstream level. So this is an area where if ethane markets shift, if capacity gets tight on our NGL pipeline systems, if this bonus space starts to erode or shift back the other direction, then we could find ourselves in certainly a challenging place in the near term until we can get some of our other residue pipeline solutions in place. So Northern Border, what do we need to know about that pipeline? You saw that there's roughly 15 to 20% of capacity left for the Bakken to compete and work its way on. The shipper mix on the Northern Border Pipeline system is such that a piece of it, roughly 10%, is held by Canadian producers. That 10% is going to be extremely hard to shake out. Those are long-term, long-haul contracts that I don't think we should count on here in North Dakota. So that gives us roughly 90% of the market share on Northern Border, assuming the gas marketers and others that own capacity on that system choose a Bakken molecule over a Canadian molecule. That has worked. We've seen the market share shift, but over the long term, it's not going to be sufficient for our gas needs and gas egress from Western North Dakota. When I try to put some numbers and some volumes on it, don't get too caught up in this. These, again, slides will be on my website, but just to put a number out there between a BCF to 1.5 BCF is the number that I'm working with for our needs long-term with what we know today of natural gas solutions that need to be in place. And we will talk about what that looks like. The one exciting project that you'll see on here, Bakken Express, will buy us a window of time, very, very crucial window of time until we can get some of those other solutions put in place. Bakken Express project, as a reminder for those folks, this is a system that will go from Glenola, North Dakota, reactivate a 30-inch pipeline that has been sitting idle now for a number of years. They're going to move that natural gas from Glenola, North Dakota, down into the Cheyenne hub as soon as early next year. There's some constraints right now on the Northern Border Pipeline as they're upgrading the compressor stations to make this project happen. In a few weeks, that maintenance and that upgrade work will be completed, and we'll be back in an unconstrained environment. But it's even events like that the upgrades, the Bakken is very, very tight. And so we've seen over the last, really since the beginning of September, competition have to intensify between Bakken production, Canadian production, for any remaining capacity on the Northern Border Pipeline. It's working. I don't believe I've been able to find any signs that Bakken has been suffering as far as production. I've seen less and less Canadian, and talking with Canadian marketers, they're having to find alternatives for their gas as a result of reduced capacity during this maintenance phase. So after Bakken Express comes online, what are our solutions? What are the things that we're going to use to address the challenges that lie before this industry? We're going to talk about construction and competing on some of our regional pipeline systems. So the next slide you're going to see is a graphic that was not in my slide deck as of Monday. It's now in my slide deck as of today. I spent the last 3 days with the gas world, working through with gas marketers, gas pipeline developers on some of the projects that they're looking at. So some exciting things. We're going to talk in a moment about that yellow system on the south. That is the Bakken East pipeline. The 2 projects that you'll see up in the northern tier, one of these is new to this group today. That is the Minot Industrial Pipeline. WBI unveiled this week at their shipper meeting. That is a 87-mile, 20-inch pipeline from Tioga, North Dakota, to Minot, North Dakota, to serve incremental industrial load along and at the terminus of that pipeline system. The Line Section 32 expansion, that is going off of the North Bakken pipeline to the near Epping for the Basin Electric project that you heard about just a few moments ago. You can see some of the initial capacities and in-service timelines, looking at that late 2020s for those projects to be in service to start providing some near-term solutions in gas consumption, keep those molecules consumed in North Dakota versus trying to compete with Canadian molecules to find a market somewhere else in the U.S. And then the big project. This is the one that folks have been very, very excited about. There were 2 projects competing against one another to serve the need that exists across central and eastern North Dakota. These projects became public late last year, first part of this year, to serve a similar need. Address growing volumes of natural gas in west North Dakota, marry that with industrial opportunity across central and eastern North Dakota. These 2 projects, the North Dakota Pipeline Authority, we have a unique position where we can participate in projects like this. The North Dakota Industrial Commission has chosen to move forward with the Bakken East project. Both companies are still active in conversations and working. We'll see how those continue to evolve. But I'll focus some time here on this Bakken East project. That is one that, as of now, looking at a 36-inch pipe from the Watford city area down through central North Dakota near Underwood. At that time, it would transition into a 30-inch pipe on its way towards the Fargo markets. And then you'll also see the Ellendale lateral, which again, one of our previous speakers here from Applied Digital, their facility down there. So that would be a 20-inch pipe from near the Alliance Pipeline Interconnect going south to Ellendale. Why this is so important for North Dakota, not only addressing those upstream needs, when we start looking at opportunities for the state as a whole, as a pipeline system gets developed across central, across eastern North Dakota, we have legacy pipeline systems. Bismarck serves as a choke point moving east. There is a very severe disconnect between high volumes in western North Dakota and opportunities in eastern North Dakota. And as of today, you could really look at that Bismarck point moving east along I-94 as the choke point in the existing legacy system. As interconnects can be developed with a pipeline system in central North Dakota across at several points, that is going to allow a couple of things to occur. First, supply security, redundancy in the natural gas system. It's going to reduce the risk of any type of disruptions. At the same time, having additional high pressure connection points will allow incremental capacity to reach corners of North Dakota that have been constrained, have been asking for more natural gas for years and years. So this is exciting on many, many fronts. There will be many communities and areas of North Dakota benefiting from a project like this than even we could originally have thought of just looking at the pipeline route. And along the way, we're going to be interconnecting with some of our legacy large interstate pipeline systems that originate up in Canada and move into central and eastern North Dakota. We're going to be interfacing with those systems in a way that we have not before. And the ones I'm focusing here on, that is the blue, the Alliance pipeline system, and then to a large extent as well, which is in maroon, the Viking pipeline system. And why our interface? We're certainly, obviously we're at the border between the US and Canada. What's happening in Canada, very, very important to what's happening here in North Dakota when we think about energy. We think about Western North Dakota gas competing against molecules on Alliance, competing against molecules on Viking. We have to think about what's happening with our neighbors to the north. They are aggressively working on new LNG and expanding LNG opportunities. Roughly 6.6 BCF a day of LNG projects in development. This is a slide I stole from our friends at RBN Energy. They did a presentation recently, and I want you to focus on that left-hand bar chart. They are anticipating a 50% growth in natural gas production in Canada. Their thesis, however, is that with the expansion and the build-out of new LNG in Western Canada, if that bottom text you see, their thesis and their idea here is that we will see less pressure on U.S. inbound flows from Canada as a result of expanding LNG opportunities up in that British Columbia area. So that is important as we think about new interconnects, new competition points with Alliance, with Viking, and potentially some opportunities for that Bakken gas to start backfilling and competing in markets if necessary. So what do those look like? The Viking pipeline system, that is a system that today, again, at an industry conference like this, I typically don't talk about Eastern North Dakota, but this is, as we connect west with east, now we need to start familiarizing ourselves with what opportunities exist with some of these downstream pipeline interconnects. So this is a system that is fed from two different directions. It's fed from the Emerson Point, which is the Trans-Canada main line coming into the United States. It's also fed with Chicago-based gas and Marcellus gas down in the central Chicago, Illinois markets up through Wisconsin. Comes in at the A&R interconnect. And so that pipe is fed from two different directions. Largely, the shippers on that system are your LDCs. These are just gas marketers and LDCs serving communities and industrial commercial loads along that pipeline system. That system, unlike Alliance, unlike Northern Border, operates very, very seasonally. So that is a system that does not operate full 365 in the same way that we're used to in North Dakota, where everything is chock-a-block full. The current supply for our communities in eastern North Dakota is such, I'll pick on Fargo. That's an easy one because it's our largest city here in the state. You can see from the contracts on the Viking pipeline system, it's fed from two different directions as far as contractually goes. You've got Fargo being served with Canadian gas coming down, and over half of the other contracts into that Fargo market are coming from that Chicago-based gas. So we've got an opportunity now with the Bakken East pipeline to serve eastern North Dakota with new North Dakota-based gas, offsetting potentially some of those molecules and contracts and pricing that gets influenced from Chicago-based markets. I think this is a fantastic opportunity for North Dakota gas in just even that one community, let alone the others that you see here on this graphic. One of the challenges that we do have with the Viking pipeline system, however, is the BTU limit on that system. So they do have an 1,100 BTU limit on their ability to bring in gas from receipt points. Using some of their flows and some blending and some math, I figured, if they continue to maintain an 1,100 BTU limit, that will change some of the dynamics about how Bakken gas can get in. That doesn't mean Bakken gas can't displace and compete in that Fargo-Moorhead area, but just purely Bakken gas getting onto that system, BTU will be a challenge. And so stating that challenge, we've started the conversations. I think there is certainly a need to modernize that Viking BTU limit. I think it's serving as kind of an unnecessary choke point for supply in some of the downstream markets. You can see that the downstream interconnects with that Bakken gas, should it get on to Viking, if it moves down to ANR, if it moves down to Northern Natural in green, those systems either have 1,200 BTU limits or no limit. And so the need to modernize and update that Viking pipeline system, those conversations are ongoing. We'll see if we can't get that done so we have one less hurdle to jump over as Bakken gas moves in that direction. So I would suggest matching the ANR system at 1,200. The Alliance pipeline system, this again has its own unique properties when we think about Bakken gas competing and getting onto the Alliance pipeline through interconnects on the Bakken East project. That is a system, as you can see, largely comprised of Canadian producers. This is a project taking dense phase gas from northern Canada, taking that to Chicago for processing, so it has a dense phase. It's got a lot of liquids entrained in it. It operates largely full 365 days a year. We take a look at the market share. North Dakota composes about 10% of the molecules getting on the Alliance pipeline system as it moves down to Chicago. And that is important as we think about northern border and whether or not we see Bakken production working its way, increasing from 10% at those 2 points today, ramping that up to some higher level as it competes for that space, competes with those marketers to get those Bakken molecules downstream. One of the advantages that we have here in the U.S. is that this pipeline operates at different regulated pressure. So there is some open, unsubscribed capacity on that U.S. side of this system, which would allow at least incremental volumes to get on with littler challenge before we really start seeing more intense competition long-term for Bakken molecules getting onto that system. So, as I mentioned, that Bakken East project and other projects that are under development, the state of North Dakota now, our ability to participate to make sure that these projects have the backing, the support to serve as a bridge for them to move forward. North Dakota, I won't harp on this. This is incredibly important. Our ability to solve gas solutions and translating that back to value to the North Dakota citizens and the state of North Dakota revenue through oil impact. The scope and scale of these projects are immensely important when we think about a BCF a day of new capacity and demand coming into the state, allowing unhindered oil and gas development to maintain at high levels of activity in Western North Dakota pales in comparison to some of the commitments that the state is making. So $50 million per year, the North Dakota Industrial Commission a few weeks ago made that commitment, made that decision to move forward with the Bakken East project where we would come on up to that $50 million per year if necessary. We would be a shipper at roughly 15 to 17% of the total capacity of that BCF a day line, so the state of North Dakota could come in up to roughly 160 million cubic feet per day, 170 million cubic feet per day, somewhere in that ballpark if necessary in that BCF a day line. The conversations that I've been having over the last several days and since that decision, what will the state of North Dakota do with this natural gas capacity that it's holding? The first and top priority is we want to get rid of this capacity as quickly as possible. So as quick as North Dakota as a state has been working towards getting this capacity, backing this project, we are just as quickly going to be in the reverse setting, working to get out of that shipper capacity agreement as quickly as possible. So first and foremost, we want to permanent release it. If we can't permanent release it, we will work with others to release in smaller increments, whether it's a year at a time, 3 years at a time. Talking with folks this week, there's certainly an appetite for any one of these scenarios to take place. If North Dakota is still in a position once that system is in service in 2030, where it still has capacity, we would then be working with an asset manager, take that capacity, monetize it to the best of their ability, to minimize any exposure the state has. And then the worst case scenario at the bottom, if the Industrial Commission, if myself, if we just sit on our hands and do nothing, we'd be obligated to pay for that commitment that we've made. But there are a lot of things that would take place ahead of that to make sure we would minimize or reduce or eliminate that exposure altogether. And in this last few minutes that I've got here, we're going to switch now to consumption. You heard a lot about it from the previous group. What does this look like in the numbers? On the left-hand side, that is how much North Dakota consumes natural gas on a daily basis. Right around 550 million cubic feet of natural gas gets consumed a day. So we are certainly still a net exporter. As you can see that trajectory, I fully expect, and you heard it from the panel before us, that the opportunities are fantastic. One of the interesting pieces when we break down that graphic on the left of who's actually consuming this, you as an industry, you are actually the largest consumers of natural gas. When you look at lease use, plants, midstream consumption, we pull that out and we see a much different story. So we pull out the oil field and the pipeline piece and we say, okay, traditional end users, let's look at power, let's look at commercial industrial users. We see that seasonal pattern that takes place from a heating and a demand perspective. We see power generation in particular on the right-hand side growing, industrial consumption growing. There are a slew of projects now that are being made public. There are a whole bunch of additional projects that are not public at this time that are also looking to grow that consumption piece. One of the interesting conversations that we have to have now with folks is can North Dakota support all of the consumption that is being brought to it? The data centers that are calling commerce, the data centers and the power gen that are talking to the midstream folks and the gas marketing folks. Is there ever a scenario where North Dakota goes from a net exporter of natural gas to does North Dakota ever become a net importer? Do we rely on other pipe interconnectivity to make sure that these systems have the gas they need? It's a fun conversation to work through. It's exciting to think that there's potentially that much interest, and should it continue to grow, that we need to be looking externally for natural gas to come in should that scenario ever play out. Our first solution that we look to is Northern Border. We can very, very easily see those Canadian volumes just ramp up, backfill, and feed into the system. So the short answer for you today, I cannot imagine a scenario right now with the projects looking at North Dakota where there is not ample solutions. We've got Northern Border that largely runs almost empty as it comes into North Dakota. You can start filling that up if necessary. We've got opportunities with the Alliance pipeline. We've got the Bison 30-inch pipeline down to Cheyenne that could just as easily backhaul large volumes of natural gas into the play. So my response then to those power companies that are having those discussions, the data centers, can North Dakota support extremely high levels of consumption within the region? My answer is yes. Those opportunities exist. We've got a fantastic network of pipes. We've got storage opportunities to help work through those ups and downs that occur within either the daily or the seasonal swings. And then contraction. This is a slide that we used to, I'm becoming less reliant on. I'm so excited about the projects that are coming that this contraction piece is becoming less and less of a talking point that needs to be highlighted. This was a fear that if we cannot get these pipeline systems done, that it would start limiting activity, throttling the ability for producers to bring new wells online as midstream options became constrained. That is something that should these projects continue to move forward, luckily we won't have to face that in the near term like we were originally fearing just a couple of years ago. And then lastly, quickly on the NGL piece, the system, again, in the near term looks very, very good. Expansions that have been taking place with One Oak, the conversion of the Highland Partners, the Double H pipeline to NGL service has put that component of the natural gas stream in a very good position. Long term, I believe that we're going to continue to need more egress for NGLs. I could see a scenario where we see a ramp up in rail until we can get either new consumption or new pipeline solutions in place for that stream. So again, with just 30 seconds left, nailed it, all these slides. These slides are on my website. Thank you so much for the time, and Ron for having me back. I'll stick around after this event in the hallway here for questions, comments, criticisms. I'd love to chat with you, and thank you again.
Thank you, Justin, for that wealth of great information. All right, a little more Bakken trivia. So the original well drilled in '87, the original horizontal Bakken well, took over 40 days from spud to rig release and drilled a half-mile lateral, 2,600-foot lateral. Just this week, a new Bakken basin record was set for a 3-mile lateral, 3 strings of casing, 8.1 days spud to rig release. So it's just amazing how the rigs in the industry continue to get more efficient each and every day.